Hello, dear students. In God we trust. Let's start the summary of business lesson for grade 12. 2023 is quarter 3. So first we're going to talk about the basic business terms. We'll start with the balance sheet. A balance sheet is actually a document that shows a company's financial health, or let's say it shows uh, the accounting equation of a company, which there's a formula called the assets equals liabilities plus the equity. Number two, the assets. The assets is basically whatever that the business or the company has for itself, like physical or as something like money, cash, or the objects. So whatever the company owns is the company's assets. What is liability? Liability are the sums of money or the amounts of money that the company has to pay. In other words, these are the debts that the business owes to other entities or actually companies. Number 4 is revenue. Revenue refers to the income generated from a business operations and activities. So the revenue is the total income that is generated by business activities. Next, we'll talk about the expense. Expense refers to the money spent on utilities, salaries, gas, and whatever the company has to pay for, like raw materials and other items that company buys will create some kind of expenses for the company. Next item is the profit. So the profit, also known as net income or the bottom line, is the difference between what you earn and spend. Okay, so if like you earn $100 and you spend $80, here's your profit is $20. You just have to do the equation, which so the profit equals total revenue minus total expenses. What is profit margin now? You can read the definition yourself, it's not that hard. Let's go to the next item, which is important, which is ROI or return on investment. ROI, return on investment, is a ratio measuring the performance efficiency relative to how much a company spent on investment. In other words, return on investment is the duration of the time that a company will get back its money. Which money? The money that was invested at the beginning of that business. So let's put it simple, let's summarize it. ROI is the amount of money, or let's say is the amount of time that the company spends to get back the initial money, the early money that they started for running that business at the beginning. Number 9 is the variable cost. We have two type of costs. One is variable cost, the other one is fixed cost. So variable cost is a kind of cost that is changing based on time or to the production. So it's not fixed, it's changing, like the price of the gas bill or electricity bill is changing. It's not a fixed cost. But fixed cost is like a kind of cost that is fixed and doesn't change regardless in the production. For example, the rent or the salary that the company pays to the workers is a fixed cost. B2B or business to business are the type of the businesses that give a service or a product to another business. Okay, like a website design company design websites for businesses mostly. It may also design websites for people, like one person or personal people, but it mostly offers services to the businesses. Now, what is B2C or business to consumer? Business to consumers are those type of businesses that offer services or sell products to the final consumer or the final customer. Some like a supermarket, a coffee shop, these are B2C. Most of them are B2C, although some of them might be B2B, both, but most of these kind of businesses are B2C. Best practice, what is best practices? Are accepted as a standard method for executing a task. That's it. To which they can effectively produce the results. What is the deliverable? Deliverable is a final product given to a client at the end of a project. So deliver is a kind of the final product that you can give it to the customer at the end of the project. What is inflation now? Inflation is actually the increase in the prices, and decrease in the value of money. So it's when everything gets more expensive and the value of money decreases, we have an inflation. In other words, it happens when the government prints or copies a lot of cash or paper money, or in the bank they produce a lot of money, like the amount of money is increased, so the value will decrease. Everything that has a high amount, the value will decrease. So the value of the money decrease, and that causes inflation. Now, what is GDP? GDP is gross domestic product. Gross domestic product is actually the total sales, the total, let's say, revenue that comes to a country based on year. GDP is usually mentioned based on year, like yearly, and it's a total production of a country. For example, say GDP of Turkey is, for example, $700 billion. GDP of USA is, for example, I don't know, for example, $900 billion. These are just an example of the numbers. You can search the Google for the exact number of GDP of countries each year, like it's different from year to year. So let's skip to the next topic, which is entrepreneurship. Entrepreneurship is a process, while entrepreneur is a person. An entrepreneur is a person who starts a business, usually without things ready for him. Starts a business, have determination, have persistence, have a goal, and he starts a business and he creates a valuable product or service, and he creates a lot of job opportunities for people. He creates a very well business, and he gives good services to society. So that is an entrepreneur. So an entrepreneurship is the process that is taken by an entrepreneur to create wealth, opportunities, and that kind of things that I told you. What are the 4 key elements of entrepreneurs? We have 4 key: vision is like the goal, the dream. Innovation is like creativity, creating something new. Risk bearing is actually being able to undertake risk and facing uncertainty. And organizing is actually collection and coordinating the necessary resources. You organize all the resources. So the role of entrepreneurs within the economy, as I told you, they create great services, they create job opportunities, they innovate, okay, they generate employment, okay, they improve the per capita income. You can write whatever you remember, okay. You don't need to write whatever you understand. Actually, I don't need you to memorize this file word by word. Now let's talk about the business sectors and business environments and the environment. So we have 3 main business sectors, and this chart you can see we have primary, secondary, and tertiary. Primary businesses are the ones that produce raw materials, like the mines, like the oil, the excavation place for oil, the raw or crude oil. The secondary businesses types are the ones that manufacture goods, like the factories, like food processing, construction companies. And the tertiary sectors are the ones that gives services to the people, like the schools, banks, insurance companies, entertainment companies, tourist companies. And by the way, for the first group, I want to name some examples like fishing, mining, okay, forestry, farming, and these are kind of examples for the primary group. So remember the well, these are the business sectors. The business environments are micro, market, and macro, which we do not go through the details in the summary file, just know their names. These are the business environments, but the business sectors are in this chart: primary, secondary, and tertiary. Human Resources Management, or HRM, what is it exactly? Human Resources Management is the process of employing staff in a company, training them, teaching them, paying them, like here we have compensating them, is in other words paying them, and developing policies to them, like helping them to improve their work quality, their services they give, and develop them to retain them. To retain them here means to keep them working for you, keep them working in the company. So what are the 7 main roles of HRM in the organization? Number 1 is staffing, which is hiring workers, development of workplace policies, compensation and benefits administration, retention, training and development, dealing with laws affecting employment, and worker protection is number 6, and communication is number 7. Let's move on to the last part, management and leadership. So what is the definition of leadership? Okay, leadership is a process by which a person influences others to accomplish an objective and directs the organization in a way that makes it more cohesive and coherent. So it's cohesive and coherent is like they are in harmony, they are working together. So leadership is something really beyond management. Okay, leadership is like motivating people, moving them toward their goal, helping them to work automatically. That is called leadership, not pushing them like a manager just speaks for their employees to what to do, what not to do. But leader is a person who motivates workers, who encourages them, who shows them the right way as they can do their best for their own benefit and also for the benefit of the company. So what are the principles of leadership? There are 9 principles here. We go through them very quickly. Step 1 is to know yourself and seek self-improvement. A good leader is always improving himself because the employees will look at him. If he's doing better and better, they will try to do themselves better and better too. Be technically proficient. A leader should be proficient, should be professional, should be good at his work, should be aware with the details of the job. Number 3 is seek responsibility and take responsibilities for your actions. So good leaders are truly responsible. They always accept the responsibility of their deed and what they have done before. Number 4 is make sound and timely decisions. A good leader is a good decision maker, can make decisions in difficult times. Set the example. By setting the examples, we mean that a leader should be a good role model for employees, because all the employees will look at the leader. If the leader is a latecomer leader, so the employees will do that. Okay, number 6 is know your people and look out for their well-being. It's another feature of leaders. Number 7, keep your workers informed. Make sure you inform your workers about all the details. Number 8, develop a sense of responsibility in your workers. That's the same as number 3, as I said, to be responsible. A good leader is a responsible person. And number 9, to ensure that the tasks are understood, supervised, and accomplished. So a good leader should make sure that their employees understood the tasks one by one. So what is the definition of management? Actually, management at the most fundamental level, management is a discipline that consists of a set of 5 general functions. So management consists of 5 general functions: planning, organizing, staffing, leading, and controlling. So management and leadership, they are somehow very similar, but they are very different In other words, in some aspects, they're very similar. So management is basically controlling, like planning, organizing, controlling. The very, very big difference between management and leadership is like leaders are motivating people. They encourage them. Besides all the roles that a manager has, a good leader also encourages his employees, motivates them, help them to grow by heart. Like a leader really likes his employees and wants them to really do their best, and that's what the difference between them. So I hope you do well, very well in the business exam, and that was it. If you have any questions, don't hesitate to ask me. Best of luck for you, and goodbye. See you.